Hi, this is Joe. We're going to talk about the market today, go into the S&P, touch on the QQQ. I want to make sure you guys understand how I look at the market conditions. We're going to go through sort of the four areas. I'm not going to go through all four in depth. I'm going to pretty much focus on two in depth and just touch on the others. But I think it's important for you to recognize the four different categories that really have an effect on whether you're in a strong or decent market environment to be an investor. So let's start out with let's start out with this, which is what I consider to be sort of the keys to watch if you want to have an idea of what type of conditions are good for investing. So obviously, the first thing is trend. I spent a lot of time in my videos talking about trend in multiple time frames. I'm going to do that again today. There are a few things taking place that is early warning sign to be aware of. I'm going to go in depth on the volatility as well. Just to briefly talk about overbought, oversold. I mean, obviously, I think we're in an overbought condition in the market. Depending on the time frame you look at, obviously if I look at it like a monthly chart or a weekly, I consider it to be overbought right now. And then if we go to the sentiment numbers, just to let you know, to give you an update on the Investors Intelligence sentiment numbers, the bulls are 42%. There's 42% more bulls than bears right now, and I view that as a time to be cautious. It's a little bit of a warning sign. We're getting up into an area where, you should be on the lookout for signs that maybe there's some deterioration in the trend or the volatility is starting to increase. So let's start going through the charts now. And I think if you look at the four time frames, and again, I think it's important. I mentioned this in the last video. If you're going to look at the market and you want to get better at looking at stocks, and my goal for doing these videos is to teach you. It's the type of situation where I really want you to be able to do it on your own. So I look at it as a educational series where over time, if you keep listening to all these videos and you go back through some of the older ones and really start from the beginning, I think you have a really solid foundation of how to look at stocks from a technical standpoint. And one of the things I mentioned in the last video is looking at four charts at the same time, I think will take you to where you need to get much more quickly. But if I just keep these charts up and you look at the rising 18 and the rising 40 on the monthly chart, and then you look at the rising 18 week, but it's really not a trend on the weekly chart at this point based on the moving averages. And you can see the big drop and then the big rally. So we're not talking about a situation where it's been a smooth trend on a weekly. But if you go to the daily chart, it's pretty crystal clear. The 18 above the 40, both lines are rising. They're not like parallel, but they've both been rising pretty consistently and staying in order. And we are moving higher. And if you go and look at what's taken place on the hourly, we've actually since really the beginning of August, we've had this same condition. 18 above the 40, both lines rising at about the same rate. So these types of conditions are not that bad when you look at the trend. If I'm classifying the market based on trend, there's a few things based on the momentum. I include momentum in the trend section. When I'm looking at the four different categories, I throw the momentum inside that. So let's take a quick peek at the momentum conditions on the lower time frames. Let's start with the daily chart. So from a daily ADX, this really isn't looking that bad. MACD is not confirming this peak. So we made a peak back in June. And, we've been making new highs after the correction starting in July and again here in August. And if you notice, MACD really hasn't confirmed that peak in June yet. But if we look at what's taken place in ADX, the blue line, which is the ADX line, has crossed above 25, which suggests that we have a decent strength to the trend. And the green DI is making a higher high with price. So it's sort of a mixed bag when I look at the momentum on this time frame. I don't like the MACD kind of just languishing here, but I have to say that the price action there hasn't been any sellers. You can see how low the red DI line is, and that is telling me that there just aren't any sellers right now. So let's just go to the hourly now. And I want to point this out because if you notice what's taken place since we started up in the beginning of August, we do have an okay trend in place based on the moving averages. But because of this big knife down and a couple of these little drops in here, look at what happened to the ADX. The ADX is dropping off dramatically, and it is not confirming these highs on an hourly chart. So, I mean, what I would be doing here is drawing a trend line here, keeping this in place. And if we were to go violently through this trend line, I would tell you that the odds are pretty high that we're going to start working our way down, and probably testing support at like 3,200. Now, if we do it from a standpoint where we go through the full-fledged change trend, and if you go back to the daily chart, we start to see a break of the 18-day moving average and some type of a little reversal or break of that trend, then all of a sudden we open ourselves up to a full-blown correction down to 3,200, which again would show up on that weekly chart where the next time frame support is right around 3,000. So, I want to make sure I'm focusing on trend and momentum when I talk about. I just put trend out there, but the reality is that component of market conditions is really both. And it's very important to recognize what's going on across multiple time frames. So let's just talk about, I want to go and focus in on the daily chart because there's one key aspect that I haven't focused in on a while, and that is the volatility. And so if I go and take a look at remember this chart, it's 3 different time frames on one chart. I've got the 18-day, the 18-week in blue, and the 18-month line in red. All of 3 of these trends showing up on the same daily chart. So it's very nice to see there's a bit of a separation now between the daily line and the weekly line. And if we were to break the daily line, you'd assume that support is right around this weekly line. That would be your next target for a drop. So again, we break we show a change in trend on the hourly, then we go to the daily. If the daily can't hold or form some type of a reversal or change in trend, then we go down to the weekly, and that's actually not that far away from where the monthly support is. So I do believe 3,000 is a pretty key level if we decide to reverse here. The only thing I'm looking at is the fact that we're so close to hitting 3,400. I mean, the thing is you got to look at major peaks like a magnet. If you get close enough to it, it kind of draws it to it. And you sort of have to assume that we're going to at least exceed that, even if it's just briefly. My guess is that we probably make it up through 3,400, maybe make it to 3,500. I have an interim target at 3,500, so it's possible we could get into that and make a little bit of a pop and then maybe go through some type of a pullback or correction. But one component that's really missing is the volatility. And what I'm saying, when I say is missing, I'm saying it's missing for a market that's going to reverse. If the market's going to reverse, we're going to see this gray line, which is the average range of the S&P. We're going to see this line start to turn up above its moving average and have the moving average start to turn around. And then you'd want to look for the first pullback to the moving average on the volatility. And if we see that, then we're probably going to start forming some type of a topping pattern on the daily chart. And I mentioned this before. I just want to make sure, I'm going to go back and make sure I get, for people that are seeing this video for the first time or seeing my videos for the first time, if you notice, look at what happened to the gray line, which is the average true range for the S&P. It crossed above the gray line. It crossed above the moving average and then pulled back to the moving average, and that was right at the top. So this is a type of pattern that is a real danger. It's a very dangerous situation for the market if we get into that scenario. If you look at where we are right now, it's just, there's just not enough volatility yet. We're probably going to see the size of these bars have to start increasing. And if we start to see size of the bars increase, that's a sign of distribution. Anytime volatility goes up, that is a sign of distribution, typically. So we want to be on the lookout for that. And yes, we did have some signs, what I would consider to be some signs of distribution, but they were very short-lived. And then the market kind of just started right back up again. So, we want to be on the lookout for signs that the bars are getting bigger, and that'll show up in this average true range. And if the average true range can cross above its moving average and get that moving average to turn up, then the risk in the market starts to really increase. So this is something I'll probably start keeping a closer eye on through these videos. I'm trying to do the S&P, make sure I do at least the S&P once a week. I don't know that it's necessary to make a call in the market every couple days. I'm looking at, what I believe to be fairly key levels. And if I go and tell you where the targets are on the hourly, I personally think that's enough. Let's just take a quick peek at the QQQ in 4 time frames. Again, we've stretched away from the moving average on the monthly chart. So, there's a little bit of a pullback risk there. I think we've got pullback risk in the weekly as well. If you notice, we've made a huge run off the low without any interruption. If I switch this back to our regular chart, I mentioned this the last time. Notice how the 18 and the 40 still have a parallel nature to them. That is not the type of condition that I would expect at a big reversal point. So we probably need to see the volatility increase, and that might cause this to either run to the upside or come down to all the way down to the 40 and then bounce up and fail. And that would be kind of like a 1, 2, 3 reversal pattern developing using a trend line and all that. But the ADX conditions on the Qs aren't that bad. So one other point I wanted to make, I want to make sure I show you this. So I know there's been some talk, and I hear a lot of different guys and talking about how hard it is to make money in the market. And I'm not saying that it's easy. But you sit there and focus and you say, oh, the only people making money are the guys that bought Microsoft and Apple and, a few select names. But this is the high cap 1000. And the symbols are right up here. And this is just a weekly chart. And I want you to see the moves. So this is NVAX, okay? Now, I'm going to start browsing through this. Hold on just a sec. Sorry about that. Okay, so I'm going to start browsing through this list. Now, LVGO, I brought up way down. I don't know if you guys remember this, but back when the market turned, I gave a list of stocks like NVIDIA, Zoom, stuff that really had held up pretty well. LVGO was one of them. And look at what this has done since breaking out at 32. Or, on a daily chart, it would have pulled back down around 40, and then it had a consolidation around 60. And then look at something like GSX. This one, NKLA, obviously, a lot of volatility, but look at the size of the move of the original breakout. That happened in May. And from May to June, it went up from $15 to $95. This VIR has been made a pretty good. FSLY, we talked about. This was one of those undercut and rally patterns. Look at Tesla, continues to power ahead, strong power trend based on the ADX, which is what I had talked about this a few months back. We talked about, when I went through the individual stocks, it was in this range in here, and I was talking about how powerful the ADX was at that point. Look at Zoom. I brought up Zoom really, really early, and I'm not trying to pat myself on the back or anything like that. Believe me, this is a humbling business. I'm not trying to get into that. What I'm trying to point out is that there are ways to make money in the market, and I'm going to go into a lot of how I go about finding these stocks and identifying them, shrinking the list down, what types of screens I run, what are the applications using the moving averages, using the ADX, using MACD, and putting them all together to really kind of zero in on the pearls. I call them pearls, the ones that are the absolute best stocks to be looking at right now. I just wanted to bring this up because look at these stocks. These are all stocks that had pretty good technical conditions in place before they took off. And so I just want to make that point. You can make money, but the difference is you have to look at a lot more stocks. You have to do a little bit more work than just focusing on the indexes or just focusing on, like the 25 biggest stocks out there. So anyway, that's the update. And I hope, you stay along or subscribe because there's going to be a lot of changes coming up. And I'm going to get into a lot more detail into how I go about doing things. All right. We'll talk to you soon.